Hey, this has been a very, very nice year for option trading if you're long the market. And my account is basically along the market. And I have a portion of my portfolio that is dedicated to selling options and also hedging with options. And this account is up 33%. The total portfolio is up 33% versus the S&P, which is up about 19%, and the Nasdaq is up about 23%. This is the day after Christmas 2025. Um, I mean, I think everybody that has been long the market has made a killing, um, especially if you owned individual stocks and you own shares. You probably made out like a bandit this year. It's been unbelievable since the tariff disaster, which was back in April, I think. Yeah, we were down here. We really dropped off um, from the recent high down here. We were down 21%. So that means a lot of stocks in the S&P and NASDAQ were down 20, 30, 40%. Uh, I remember seeing AMD down here. I think it was at $76 it went to, something like that. And that was the stock to buy. That would have been nice because since that time, I mean, it's up substantially. It's up, well, it hit a high of 267, which was up 245%. But I would take a 176% gain. Anyway, um, it's been a great year. Um, I did have some losses in the e-minis. That's what basically hurt me a lot. Um, that was down, God, it was over $5,000 in that one. And I had a disaster with Constellation Brands. And I mean, it was, I mean, think about it, from $228 down to, well, it's 140 bucks now, but had gone as low as 126. So you take $100 off a stock, and you're going to get hurt. But I think I was hurt after this, at this period right here. I was hanging on until this period right here and just kind of fell off. So that was a $1,750 loss. So when I combine that um, with my e-mini loss, and I had about a $32,000 profitable year. So 32,000. So it totally enhanced my income, my profit for the year. My overall return was fantastic. And like I said, most people that were long the market made a killing. So it was a good year. I had been trading a lot of bull put spreads, credit spreads, in addition to just being short the puts. This is a portfolio margin account, so I can do a little bit more. And you know, it's basically, I think I have too many positions on, but a lot of these started out as you know, um, uh, credit spreads, and I did sell off the longs when the market, if the market came down. So what was that? This, I just added a whirlpool trade, and I'm starting this as a credit spread. I have a couple of options on. Okay, so I'm hedging with this long 62 and a half put going out to February. Um, I could, well, this is not much of a profit, but for example, if I was to sell off, if there's a big market to sell off, this long would be worth a lot more. So you could, and if you still believe in the stock, I mean, granted, if it's gone all the way down here, just close it down and reposition. But if it drops down to like 68 or 69 or 67, um, like pretty soon, this would be profitable, and I could stay long. I mean, I could stay long the stock with that short put, the short puts at the 65 strike, and hopefully it would recover. I mean, it's not a high price stock, so I did that a few times. Worked out pretty good. I wish I caught that Meta. Meta is a high price stock, obviously. I just recently sold off the long. This is going to expire soon, but um, when we had this massive drop off in Meta, the long put that I had the 550, 540. That 540 was worth a lot of money, and I should have dumped it. I would have made some good money on that. But at this point, when it dropped off, I think it dropped like 20% or so. Yeah, 22%. But that's a good opportunity right there if you still believe in the stock. But and you are taking on additional risk, obviously. Um, but Meta's a company that's going to be around for a very long time, I think, and they're going to continue to make a killing. But um, my biggest loser was in Clorox. Um, this has been a real tough, tough year for Clorox. Who would have thought? I mean, this stock is just on a straight path down. I mean, 164 to 96. That's ridiculous for, uh, you know, a a name like that. But I don't know who's running the company. But yeah, I'm down this year. This is my big loser, 24.54 on the year, and I should stick with my uh, if I'm down $1,000 on a stock, I should just close it out. And I didn't do that in this case, and I'm I'm still thinking I'm gonna turn this thing around, and I just kept digging, digging. So anyway, hey, everybody makes mistakes. So, I am far from perfect, but, and I've had my fair share of bad trades, but this is definitely one of them. Um, Definitely still in the game. I still want to win on this. I mean, um, I still want to make up some of that loss, but I do have a really far out position because I didn't want to take a hit on I didn't want to take a debit on this long position here, which is short the $95 puts going out to January 28. I will eventually roll that into, January 27, and then, I'll get into 26 eventually if the stock starts to recover. Um, but yeah, it's been really tough. Without that put, this is what it looks. So I'm almost pretty much delta neutral, and you know, um, I I will make money in this. I'm determined. It's the only reason I kept this on is because I was doing so well in my account overall. I was like, I just wanted to have all winning positions, which is kind of hard to do. You're gonna have losers, it's the cost of doing business, as they say. But I usually trade far out in time. I mean, all the time. I don't do that. I know Tasty Trade is into like uh, trading like 45 days out and closing the trade when you get to about 20 days or something like that. But I just don't want to trade so close. Because say for AMD, for example, I'm just looking at this now. Say you go to February 6th and oh, this is a new, that's a new one. Say you go to 56 days out, um, and you sell what do they sell about I forget what they sell. I think they're right around the 15 delta, I think. So if you get a move like $30, for AMD, it's really not a lot. I mean, on both sides, if you're selling the strangle, and so you're at 180 and you're at 270, 270, 270 from here. Well, okay, that's definitely room, but maybe I'm completely wrong. 10, 20, 30, 40, 50, $50 away. But I mean, the stock can move $50, right? What did this go from like 170 to like, I don't know, just say 234? That's $60, So you'd be uh if you were short the call, for example, you would be in a very bad position. So that's just for example. And then what did this drop from 267 to 195? Yeah, you would be hurting. You'd be a hurting unit for sure. So, I mean, if it was to drop, 60, 70, 80, 60, 70 points, 70 points. I mean, if the stock like AMD was to drop, 70 points, then you're going to get hurt. So if you're so close in time, and that's why I am further out in time, gives me more space, more room, and time to react and adjust. So when I adjust, I usually just if I had to, if it gets to like break even or if it's right at the strike price that I'm short, I will um, buy it back and then just maybe I'll go from March to like June or July, and I'll roll down the put, and I might sell a call spread. So and bring in a little bit more, and just kind of hedge a little bit with that call spread. Um, so I do that a lot too. But bottom line is, I trade far out in time to be further away from the current stock price. And I think that's proven to be a winning strategy over the last since the COVID crash. This account is up. I hit $100,000 in profits in my options. Now that's not a lot. I mean, over that span of time, but it's like slow and steady, and I'm not going crazy. I'm not all in all the time. I'm as light as I can be. I try to be conservative, even though you see a lot of positions on here. I'm definitely going to lighten this up a lot. So my big winner on the year was Dow, uh, not Dow, but Dollar General. This has been a great one. I was trading multiple contracts though earlier in the year, and then I kind of just brought it down to I think I'm just trading one now. I try to bring my trades. I just want to trade like one contract if I'm in a good position. Oh, this one I'm actually trading a. What did I put in here? When did I trade this? I have a credit spread and a short put. So I probably did that one, and then I forget how I did it, but I think I traded these all on the same day too, so I can't even go back and see. Um, three, I think I did trade them all the same day. 12.5, 12.5. Oh, 12.1. Okay, that's the one that was. Okay. Okay, what's this one? Let me see. 12.1 and that's 12.5. Okay, so I did this credit spread. Okay. And this 85 put that I'm short. I did that separately. But anyway, everything's up. So yeah, so it's a good year. Um, you know, uh, Dollar General's the winner. Boeing was right behind it. Great company. I did very well with that stock, and I think traded more than one contract. Um, because with that all that volatility that we had in April, I mean, it was just the premiums were so huge, and so a lot of these stocks benefited. I mean, the option premiums were kind of inflated for a while because we did have that spike in volatility, which was, I think it was almost as bad as the COVID crash. So a lot of margin calls, and people lost a lot of money. I mean, definitely. Um, but then the market came all the way back. So, but yeah, like I said, Clorox biggest loser. Dow was right behind it. Dow, Dow is starting to recover. I think I feel it. I feel it's starting to come back. I'm in this position here where I'm in March, but I am short four puts and I'm short a couple of calls at 25. This is such a low price stock. I don't see it jumping up. I hate to be short calls, because you can really destroy your account. Because the price can just go, it could just rip right by your short call, and next thing you know, you your account's getting destroyed. Um, and Clorox, I will recover. I will recover a little bit with this one. I'm kind of determined to. Um, but yeah, that's it, man. I just I trade far out in time. Um, it's kind of a boring way to trade, I know, but it's pretty safe. I just pick great companies, and if I had owned shares in these some of these stocks, I'd be, oh God, I'd be loaded. But um, I wish I could buy all these stocks. I do have a lot of funds that I own that pay dividends monthly and quarterly. So, um, I mean, it's not the best thing for a taxable account, but definitely not very efficient. But because you get whacked with the dividend tax and the short term capital gains with the options. But anyway, if you're making money, it's okay to pay a little in taxes, I guess. But still, you know, um, I'm in a lot of these stocks. I'm holding out until the first of the year before I roll them, um, or I will make credit spreads out of them. Um, but you know what? Not a bad idea would be to wait for the next big downdraft in the market and just kind of, if you get down 10%, 15% the S&P, which is very likely to happen. They're predicting a very good year for 26, all these market gurus, but nobody knows anything. But if you do get a sell-off and you get an opportunity like we did last April, you go in there when everybody's selling, and usually the selling would end like a Monday would be like a Monday or Tuesday morning. No, usually Monday morning if there's like a big sell off on a Friday. Um, because Monday would be a continuation, especially if nothing has changed over the weekend. Um, you go in there, you start selling puts right at that in that first hour where volatility is highest. When you see a spike in the VIX, that's where you win. That's where you make big money, and you don't really have a lot of risk because you can be far away from the money, and the premiums are really juicy. So, but don't forget, always hedge your account. I use a Black Swan hedge most of the time in the SPY or the SPX. And everybody knows about the Black Swan hedge. It's out there. But I did trade some uh, AI stocks. This one didn't work out too well, SMCI, but uh, Soundhound and Symbiotica was I guess that was okay, but and obviously I did trade the ETFs on the small caps IWM and the S&P ETF SPY. So that was pretty profitable trading those. And everything else has been pretty good. Nike had just a bad report recently. That's why that was negative. It was positive for the year. Procter and Gamble's been tough to trade all year. I got a slight loss in Google. I don't even know why I have a loss in Google. Google's been going up. Maybe it was earlier in the year. How do I have a loss in Google? I'm sure the 220 April put, which is way the hell out. But Google's been ripping. How did I get a loss in that one? I don't know. I have to go back and look. PayPal, just about break even. This one, Whirlpool, I just started up recently. Cheesecake is up a little bit. Qubits, a slight gain. Meta, I've just been trading the credit spreads. And you get all these hymns. I got that's like a online CVS, but better. SoFi was up. Airbnb is recovering nice. Um, what do we got? Oh, where am I trading hymns? Hymns? Let's see. Okay, hymns is well, well, it's a low price stock, so I am short the 35 in January. I'm gonna obviously roll this, so I'll go after the first of the year. I do want to keep my taxes as minimal as possible. It's not a lot of not a lot to worry about. A couple $100 here, but you start adding a couple $100 here, a couple $100 there, 500 bucks there, it all adds up. So I'm gonna probably roll this. I might go to February. I'd like to get a little bit further away from the money. That's not traded at that in February. Let's see, March, April, April, or May. No, it's not traded. Let's see. Let me go to 30. I can get a credit if I go to May. Let me see if I can go March. I can still get a credit in March. Let's see. I can roll it down. I can go from a delta of 99 to a delta of 55. Um, and I would be down here at 30 bucks, right? My margin requirement would go from 775 to 514. That's all right. But I would be over here. That would be cool. Then I'd be down here and I'd have more room to play with. And a stock like him's, I'm very confident with a stock like that, but it does move around a lot. So, yeah, as you can see, from like over $60 to like, 30 bucks, 23 bucks earlier in the year. So, but anyway, that's the situation. And anyway, it was a great year and I'm very happy. Obviously, these are great companies. I like to trade, um, but they could be a great company, but their stock price could tank too. So don't forget that. Just look at Clorox. Look at what happened. Merck went up recently. The president said something. I think a couple months ago on Merck, drug companies, and so it kind of took off. Yeah, it did. So this was a losing stock for me for a while, but I hung in there. Um, So that's the story of the Maury. It was a great year, my best year so far, trading these short puts and credit spreads, and very easy to do. You should definitely consider a paper trading account before you do any kind of real trading with real money, and just test it out, and see how you like it. Okay. So that's it. That's I haven't done a video in a very long time because these videos are basically for me, just for my remembrance of these years. But anyway, have a lovely, lovely holiday season, as they say. Holiday. Peace.